All right, welcome to the daily market recap for Thursday, November 6th. In today's video, we'll be going over the action today from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off, we had another major distribution day on the NASDAQ, down 1.86%, 1.9%. Just wanted to walk through kind of like where we saw this start to break down. No surprise, we had our first unfilled gap down right at the top. I always say trends do not change until you have an unfilled gap in the opposite direction. We got that on October 30th. Twice we had gapped up into that range and sold off, both times pretty weak closing ranges. And then eventually we had that big gap down on Tuesday, a rally back yesterday with the leaders acting pretty well. But unfortunately, today we had another gap down, opened right near the high of the day, closed near the low of the day after undercutting and reclaiming that support gap. But pretty gross action and basically right back to the top of October 10th bar. So we had that big distribution day, some chop higher, an acceleration move, and now we're right back to square one. And for me, I kind of use the 20-day EMA as a risk on, risk off indicator in the market. And for now, we are risk off, and we've seen 3 unfilled gaps to the downside, which is not a good signal overall. S&P 500 down 1.1% today, also closing under the 20-day EMA, also with a slight gap down. This one is already below the highs from October 10th, so some relative weakness on the S&P 500 compared to the NASDAQ. IWO growth stocks of the Russell 2000 first close under the 50-day moving average since this trend started back in, what was that, May 2nd, when we got back over the 50-day. Not a good sign overall. Still, I use that 20-day EMA as the risk off, risk on. The last 3 days have been risk off, and we've seen major distribution to the downside, down 2.2% today. ARKK, another gap down, close under the 50-day moving average, slight bounce at that support gap here. But overall, this chart does look pretty broken in the meantime. Hopefully we do find support there. We bounce back up, then we could start to build out some higher lows, maybe like an inverse head and shoulders for an end of the year rally. But that's still going to take a long time. The easy dollar environment that we've had over the past 6 months, I don't think we're going to have that at least for the next like 3 or 4 weeks. There's going to be stocks that break higher. There's going to be stocks that break lower, but I just expect a lot of chop overall. Getting into crypto, whoops, let me check on Bitcoin. We rejected the 5-day moving average. We're right back at that 100K level, 101 right now. Obviously, we don't want to lose that 100K level. Otherwise, this looks like a stage 3 top, and then we begin our stage 4 decline, which is not good for risk on assets. Ethereum down 3.3%, back under that 200-day moving average. So we had a 1-day quick rally back up there. So far, just an inside bar, but definitely like a weak response off that major flush. Getting into the liquid leaders, let's sort this by price percent change today. Still some strength in the leaders overall. STX up 0.9%, new all-time closing high, which is very strong on a day like today. MU, same thing, up 0.4%, new closing high. Google up 0.2%, also a closing high. So those 3 stocks, very, very good relative strength. But then the rest, First Solar down 1.9%. Obviously, honestly, not bad. Lower volume than average, still over the 5-day moving average and the HVC. Solar stocks are still something to focus on in my eyes. BE down 3.2%, but extremely low volume as this chops over the 5-day moving average. The only thing wrong I see on this chart is the unfilled gap down, which has turned into a resistance gap. But honestly, this is still not doing anything wrong. NVIDIA, this, I would say, is doing something wrong. We had multiple tests of that 50-day moving average, the support gap down here. We had an accelerated move up top and then multiple unfilled gap downs. Very quick unrolling of that move back into the support gap, bounced basically at the low there, but still not great action. You don't want to see, okay, we're breaking into new highs. We immediately stall and immediately give back a majority of the move, especially this being like the AI leader. not a good look for the overall risk market. SNDK down 4.3% today. This is gapping up on earnings. We'll cover that on the earnings section. AMD, another semiconductor that was weak today, down 7.3% into the 20-day moving average and the gap support gap zone. This is our third unfilled gap down from the top, which is not ideal. And then IREN, I added this yesterday to replace VRT, and this was down 12%, basically immediately. It's up slightly after hours after they reported earnings as well. Next, we have the industry ETFs. XLE, the energy sector as a whole, starting to show some relative strength here. Very choppy chart overall, but could be an emerging theme because we still see higher low, higher low, higher low against the 50-day moving average. And then on a weekly chart, this has just gone sideways since 2022. So if we're going to see rotation out of tech into the market and money stay in the market still, I think XLE is probably a group to focus on. KWEB, the Chinese Internet ETF, some big strength in the morning, but eventually rejected at that 20-day EMA, closed back under the 5-day. Hopefully, this is still a higher low overall, and we see money rotate to other areas of the market instead of leaving it all together, but not the ideal type of close. XLV, the healthcare ETF. If you've seen my channel, you know the last week or two, I've been really kind of pounding the table that I think we're seeing rotation into this group. Earlier this past, or I guess that was last week, we had a oops reversal under the support gap under the 20-day EMA on October 31st. Since then, every single day we've closed higher than the open, so showing accumulation while the market is open, while the market has been like indexes have been going straight down, not straight down, but stair stepping down. So some good relative strength there. Biotechs, also healthcare related, seem very strong, flat on the day. We had that undercut and reclaim of the support gap under the 20-day yesterday, and then some good relative strength today. Financials, basically an inside day chopping, close under the moving averages and another rejection of the 20-day EMA, but overall on a closing range basis, pretty strong compared to the indexes. Hopefully this is a higher low and we get money flowing here. And then onto some bad. ITB, the home construction, another day under the 200-day moving average. This feels just like a failed move higher. We have PEJ, the entertainment and leisure ETF. So where Americans are spending their money, like on entertainment and leisure. Projection at that 50-day, and then it has just gone straight down since then. Obviously, a tough economy that we're working with. Cybersecurity shakeout closed relatively well, and there's still some cybersecurity names acting pretty well. CrowdStrike comes to mind. But under the 50-day moving average, it's just not going to be an easy environment when you're seeing stuff like this. Same with IGV, the software ETF, well under the 50-day moving average now. You got the 10, the 20, and the 5-day all sloping down. Yes, you're going to find stocks are breaking higher, but it's not going to be a very clean trending environment when you have growth sectors of the market under the 50-day moving average and selling off on big volume. XRT, the retail ETF, just hammered today. I assume Elf Beauty had something to do with that. They were down like 37%. Again, weak consumer. NLR, the nuclear and uranium stock, starting to unwind quite a bit. First close under the 50-day moving average since, when was that? August 21st. And really, like outside of that 2-day pop down, the entire uptrend has stayed over the 50-day. So hopefully we do just get like a couple of days like we saw back in August, and then we can get going again. But definitely a lot of damage to repair there. UFO, a lot of the kind of aerospace and defense names really starting to break down. Third close under the 50-day moving average. And then the cannabis ETF, lowest close since this uptrend began, really unwinding down 8.9%. So a lot of weakness overall in the market. Not one that you're going to be having an easy time playing the long side. We do have some earnings tomorrow before the open. CEG is really the important one in my eyes. The rest of these, not super excited about. Going back to Deep View, I've got a couple of the earnings that reported after the market closed. We see Frog up 27%, AFRM actually up 12%, INOD up 8%, SNDK, like we covered earlier, up 7%. Airbnb, which I don't know anyone who uses Airbnb anymore, but maybe that's like, all right, everything bad is already priced in. That's up 5%. Um, TTD, which was down like, I want to say like 10 or 15% earlier in the day when I checked, now back to flat. And then on the downside, we have SMR, which has been like one of those nuclear names that participated in the rally, really starting to break down another 4.3%. USAR, precious metal names, just cannot find a bid. Or the rare earths, which was one of the kind of leading themes or more speculative themes, I would say, just complete collapse here from $43. This is trading at like $14 just a couple weeks later. RUN, a solar stock, down 8%. So we might see some pressure on solars going into the day tomorrow. DraftKings, which to me, I think Robinhood is probably eating their lunch. Who wants to gamble on DraftKings when you could do it on Robinhood? Down another 8.5%. MP, precious metals, down 8.8%. Archer, down almost 10%. Not great action here. Blockchain or Block down 12%. AOI down 15%. I really had some hope for this name, but it's trading kind of around the 200-day moving average now. Probably needs a new base after all of that. And then Open Door, which has been kind of your risk on, risk off speculative name, down 16% after earnings. So very clear risk off type action in the market right now. Before we get into the long setups, we do have updated numbers from the NAAIM. Let me refresh the page. There we go. Last week, we had our sell signal, or at least our warning signal, where we were over 95% invested. And this is the active investors' actual exposure. So it's not a sentiment survey, it's their actual exposure. And over 95%, that's when I start to look at things as a little extended, keep like an eye out for false breakouts, liquid leaders breaking down, all that kind of stuff. And that's exactly what we saw over the past week. Lots of leaders that got extended started breaking down. Indexes, multiple gap downs, speculative names just completely thrashed. And we went from 100 down to 90. So we did unwind 10% of that positioning. But usually once you flash that signal, it takes more than just like 1 week. And especially given where we've come over the past 6, 7 months in the market, um, I think we probably either have more chop and just a lot of volatility to wear people out, or we need to scare people out with some price depreciation. And still, like the most bearish person is net neutral this week. So it's not like this is a like, okay, everyone's thrown in the towel. Now it's time to go long again. No, we're just unwinding from 101, the average 101% exposed. At that point, you're just not going to be able to get really good risk reward on the long side. But we'll still cover some long setups. We'll still cover the short setups. I I think a lot of this is just going to be chop though. First up, XBI, the biotech ETF. You can play this as LABU. I'm just watching for another test of that 20-day moving average and the support gap right around 107.60 as the entry there. You want to undercut the lows, reclaim them. So wait for some buying to come back. So then you can manage your risk against whatever the low of the day is there. Snowflake has been a really strong software name. Software theme itself has started to pull back. And even while software has been pulling back, this is closing at the 10-day moving average. So nice and strong. We look for an undercut and reclaim of the support gap and the 20-day EMA. When stocks make new highs and then pull back to their 20-day for the first time, especially when that lines up with the support gap, that's usually a good risk reward spot. In one thing that at least for my trading is if the indexes are under their 20-day EMA, instead of trying to buy breakouts, I will only buy undercut and rallies or undercut and reclaims, whatever you want to call it. Because if people are trying to de-risk and de-leverage themselves from the market, they're going to use like very liquid points on the chart to sell as much as they can. We saw that with SoFi earlier today. Sorry, I'm kind of going on a tangent here, but we saw that with SoFi today. This is one of the better looking charts in the market. We broke over yesterday's high. And then if we go to like just like a 3-minute chart, you can see how quickly we responded to that key level. We broke over the high, sold off, broke over the high, sold off, and then really triggered to the downside. So they're going to be using pivots like that to sell into because there's enough liquidity there to get out without moving the price too much. So I don't want to be buying pivots. I don't want to be buying stocks on breakouts. I want to be buying pullbacks and undercut and reclaims until the indexes prove themselves to get back over that 20-day EMA. For solar, probably going to start down tomorrow because of our UN's earnings, which is fine. I don't want to be buying on strength. I just said that. Would look for a pullback under the 5-day moving average and the high volume close from earnings, that 267 area. If we pull back tomorrow and then have another shakeout on Monday, like down to the 10-day, I think that would be even better. I definitely want to be patient in this environment, but solar stocks are one of the themes that I still think can work if the market doesn't completely fall apart. Nokia, this is just more of a performance boosting type play from $4 up to basically 8, pulling back. Super tight day yesterday, a little bit wider today, but still relatively tight. Would look for an undercut of the lows of this pullback and the 10-day EMA right around 670. And then you want to reclaim that support gap low at 680 as the buy point. Stop would be tomorrow's low. FUTU, there's a couple of Chinese equities that are still holding up. FUTU, NIO, XPEV, BABA, BIDU come to mind. FUTU is the only one that's already back to its all-time highs, like right there, hasn't quite taken it out, but is building out a handle right now for that spot. So we just want to be accumulating shares on a pullback into either the 20-day EMA or the 50-day. Like within that zone is where I would be building exposure, and then keep my stop under like 173. GH, this is a healthcare related stock. Incredible amounts of accumulation here. Was up 28% on earnings, highest volume in over a year with that move. Very strong close. And then it had a secondary offering from November 4th to the 5th. We gapped down, still managed to reclaim the high volume close and the 5-day moving average and closed well. Today, when the market got hammered, this sold off in the morning, reclaimed the HVC, and actually closed positive on the day. It still has this resistance gap, but again, don't want to be buying it on strength. Just watch for another pullback into that high volume close around 92.60 to play versus the 10-day EMA, which I'm guessing will be around 88.30 tomorrow. Rambus, semiconductor name, very strong still. Two unfilled gap downs, which is working against it. Kind of a tech unwind, which is working against it as well. So I don't want to be taking that on strength. Watch for a pullback, probably a better setup for Monday, but an undercut of the 20-day moving average and the gap zone low right at $100 because that's a key round number. Let it undercut and reclaim that as well. Then you can manage your risk against the 50-day moving average. MEDP, another medical type name. Nice move up on earnings, up 9%. Has gone sideways since while the market's gone down. Nice low volume pullback here. Would still want to see a pullback into the previous lows here, that 20-day EMA. That spot at 573 would be the spot to enter, and then you could keep your risk at 2 or 3%. FLNC, this is kind of alternative energy related. We got the 200-day moving average starting to slope up. Big accumulation bars as we rallied from 7 up to 21. Now just trading sideways while the market pulls back. There is a gap zone at the 10-day EMA right here at 1920. Maybe you could try that, but really in this market, I want to be patient and wait for as many people to get shaken out of their positions as I can until I enter. And we've got the 20-day moving average here and a gap zone. So that's where I'll be waiting for 1812. If I miss it, I miss it. That's fine. But that's the spot that I've got alerts for. BTSG, another healthcare related name, nice flag into the 20-day EMA. Little undercut of the lows of the pullback and that 20-day EMA. Reclaim that at 31.90 would be the buy spot. You could take it on a break through today's high. I think in another environment, that would be a perfectly fine entry. But people are still kind of de-risking their portfolios now. We've seen that across the market. Even though that this is an emerging theme, I would just rather play it on an undercut. TMDX, another healthcare related name. You got a support gap that's been undercut a couple times. So just another spot at that 120 undercut in reclaim, manage risk against the 50-day moving average. Nice big base here. And I still don't see a lot of people talking about TMDX. It's starting to crop up on Twitter, but Only a couple people are watching this still, and they're probably not watching the support gap. So that's where I'll be watching. And then ATEC, another healthcare related name, just looking for a pullback into that high volume close right at $19. You got the 5 day moving average there as well. Stop would be, can't give it to the 10-day. I would just use a 3% stop or so. And on a monthly chart, this is breaking out of a 10-year base. So when you're doing that and you're in an emerging theme, showing great relative strength, holding above your HVC, it's a stock to keep on your radar. On the short side, I think a lot of the move has already started on the short side. A lot of the speculative names that I am more focused on shorting have already made some monster moves to the downside. So I don't have a very large list at this point, but we'll go through a couple here. Costco, I think the spot at the 50-day moving average was perfect to play against. Today we had a gap down, sold off into this 910 zone. And what we've seen at 910 is buying support, buying support. So zooming out, I think we have your stage two uptrend, your stage three top. I think this is going to enter stage four decline, very similar to Sprouts, SFM, and MMYT, which we'll cover in a second here. But because we haven't cracked through those lows where we found support and we haven't purely entered stage four, I don't want to be shorting on weakness. I want to be shorting on a pop back to those moving averages. So that gap zone fill, 935, that would be the entry and then a stop at yesterday's high. IONQ, this reported earnings yesterday after the close. Actually, some good relative strength here. But overall, uppercut and failed the 10-day moving average and the resistance gap here. I would be looking for exactly that same spot. Let it take out today's high and then lose the top part of the resistance gap at 58.40 as the short. Then you can manage your risk against whatever that high of day is. Because this is showing relative strength, we haven't taken out the previous lows here, and it was positive today. If it does break out and take out your stop, like always listen to your stops, but especially on a name like this, um, it seems like there's a lot of people that are trying to short these quantum names, probably for good reason. But if too many people get short and then the market does bounce, this can probably get right back up to 64-ish pretty quickly. So take your loss very quickly if it starts to work against you. Next, we have SNDK, which again is on the leaders list, is one of the more powerful stocks in the market. So, Nick, why do we want to short this? Because at some point you're going to see more and more liquidity get sucked out of the market, and they're going to go after the strongest names because they are already extended. They've made monster moves. Um, and what I would want to see here is on like an intraday chart, we've taken out the previous highs. So what I want to see tomorrow pre-market is wherever we trade, we could take these out and pre-market and go higher. That's fine. But before the market, once the market opens, I want it to stay heavy. I don't want it to take out the pre-market highs. If it does, do not touch it. It's not time to short this name. It's I would say the strongest stock in the market along with BE still. So if we take out pre-market highs, not a trade to take, but if we open up below those prices, lose the daily view app, that would be a short entry, and then your stop would be those pre-market highs. QBT already extended to the downside, so not ready tomorrow into this 200-day moving average. So we probably do get a bounce back. So looking for a rally back up into the 5 day moving average around 1440. If we could get a little bit higher of a rally into that $15 and the 10-day moving average, then you can manage your risk above 1550, that gap zone, and that would be a little bit better spot. MMYT, this is kind of the idea behind the Costco short. You had your stage two uptrend, your stage three top, multiple fails at that declining 200-day moving average. And then this broke down on earnings. We bounced back and just relative weakness all the way down. We continue to get rejected at that 5 day moving average. So once again, just a little rally up into the 5 day at $80. Stop would be at the 10-day moving average, just 81.50. Very tight stop there. You could even do 82, and that's, what would that be? Quarter percent? No, sorry, 1%. Not much risk there. And once you get started with these stage four declines, like SFM did, is pretty quick to the downside. So SFM, grocery store, stage two uptrend, stage three top, kind of built out the stage 4 decline, and I would say it really entered it at 142 on August 28th, and then just waterfall action down. And last, we have PSIX. This did report earnings after the close. We kind of have a little head and shoulders pattern here. You got your left shoulder, your head, lower high, and then week close today. Let's take a look at where we're at right now. We're gapping down right around $65. So into the $65 range, would want to see a rally back up, and it should be sizable, rally back up into the previous lows here at $73. Then once you lose the daily VWAP, that would be the short versus whatever the high of the day is. Honestly, when I put this on the list, it wasn't all the way down to 65. That's a little bit steep. But we'll keep some alerts at $73 to see if we do get that kind of morning bounce, then start to get heavy again, lose the daily VWAP, then you can manage your risk against the high of the day. So that's going to be the daily market recap for Thursday, November 6th. Hopefully, you guys survived this and didn't get too much damage in your portfolio. Definitely in a tough environment, definitely in a downtrend now. Indexes all under the 20-day EMA, Bitcoin breaking down. That is risk off to me. You're going to be able to play some bounce backs, but really focus on undercut and rallies if you're going to play anything on the long side. Or use this time to your advantage, improve your system, improve your risk management, improve your journaling. That's going to be the highest ROI instead of trading like a market that is looking for liquidity to sell into. I'll leave it at that. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.